In this video, I'm going to show you the best way to make money as oil prices rise. Investors have begun to realize that the price of oil is not going down and are looking for ways to make money on the rise in prices. Crude oil has been a hot topic for investors over the past few years. The market has seen drastic changes, which makes it difficult to understand how they work. Oil trading can be complicated, but with this video, you will learn everything you need to know about crude oil futures so you can start making money as the price of crude rises again. This video will teach you exactly what an investor needs to do to profit from the rising prices of oil and how these contracts work. It also includes information on investment strategies that can help those who want more than just a return on their investment when buying into this type of commodity contract. My name is Griffin from Trendy Money, and in this video, I'm going to break down how you can benefit from the recent surge in oil prices by investing in a few choice companies. We recently received a message from one of our subscribers, John, who told us about how he managed to increase his investment portfolio by investing in crude oil. This is John's story. The smartest financial decision I've ever made was to invest in crude oil. When I first started, I had a ton of doubts, but then my friend told me about the amazing gains he had seen with it. So I spent some time reading up on investing in crude oil and found some great tips for success. After that, it was all smooth sailing. Today, my portfolio is very strong and now boasts over $10,000 worth of stocks. I'm going to share with you some of the tips for John's success in this investment option, which he shared with us. Oil prices are rising and the world economy is suffering, but there's always a way to make money, even in these tough times. In this video, you will learn how to get ahead of the game by investing your money wisely. This first tip John shared with us tells you about the most important thing to do before you set out to invest in oil. Check it out! First, you must do thorough research. Investing in a commodity like oil is a big decision, and it's important to make sure you are well informed about the investment before you buy in. You need to look at the historical returns on an investment and understand its terms. This way, when making a decision on what investments to make, you can have more confidence that they will be successful for your portfolio. Investing in something without doing research first is like going on a date without knowing anything about the person beforehand. It just doesn't make sense. It's worth taking some time now to learn more about how things work before making one of the most important financial decisions of your life. To make a wise investment, you must analyze their future potential through research. It is impossible to know what the market will be like in the future, but with a bit of research, you can make informed decisions. Did you know that your choice for capital appreciation matters a lot? I will now show you what this means and why it is so important. The oil industry is one of the most lucrative industries in the world. It has been a source of income for many people. However, it can be very confusing to understand how it works. Many investors are not able to make money from this industry because they don't know what they are doing. They end up investing in an oil company that doesn't perform well or loses value as time goes on, and their investment becomes worthless. The good news is that you can avoid this scenario. How? By choosing the right capital appreciation. Once you've done your research, the next step is to determine at which price point you want the price of oil to reach. You also need to decide if you're interested in investing or waiting for a higher return. These two factors are very important as they will help you decide on an investment vehicle. Here's one thing you need to know. Oil is a commodity with little to no interest in the income it generates. It does not buy back shares from you or pay out dividends, so all profits are earned solely through capital appreciation. The oil market has been on the rise for some time now, and many people have noticed that their stock's portfolio's performance has improved since they invested in this product. Oil by itself does not produce any type of money-earning opportunity, but investing in this commodity can be profitable as its price increases. Simply put, capital appreciation means that the investment value is increasing because of the latest price increase. Now that you know how your investment portfolio could rise, I will now show you how to invest in oil right away. You must listen to every bit of what I'm about to share with you. You want to invest in oil but don't know where to start? The next thing to do is to open a brokerage account and finding a brokerage that offers options trading. Check out the description for a list of the best brokers for you to choose from. Once you've selected your broker, open an account and apply for the right to trade options. You are required to tell them about your investment history, the total amount available to invest, and how much you can lose so they can permit you to trade options. The best part about investing in oil is that there are so many ways to do it. You could buy shares of a company or purchase futures contracts on commodities like crude oil or natural gas. It all depends on what kind of risk tolerance you have and what type of return you are looking for. Whatever option sounds good, just remember that any investment comes with some level of risk, but if done right, the rewards can be huge too. The next tip discusses the next step to take after you have selected a brokerage firm. Follow closely and see how this is done. Go for a direct investment instead. Once you are ready to move beyond an indirect investment, you can choose to directly invest instead. A direct investment can involve buying a contract in the current or future market. The spot price is how much you would pay for 1 barrel of oil at any given time. A futures contract lets you buy a set number of barrels on an agreed-upon date in the future. For most people, buying futures contracts on oil is not possible. That's because it requires a lot of upfront cash. Additionally, you are required to put up collateral and buy the oil. More often than not, corporations, investment managers, and hedge funds get involved in this type of transaction instead of individuals. When oil prices are high, businesses can then take advantage of these circumstances by using this market for their financial gain. For instance, as oil prices rise, an airline company can buy futures contracts for the oil it will need up to 2 years in advance. This locks in the price of fuel at today's cost and removes the risk that high oil prices could cut into their future profits. Although this works so well for businesses, it may not be so great for individuals. The good news is that you as an individual investor can still get the best direct investment deals. The next tip I'm about to share will show you just how. If you are an individual investor, it may seem hard to get involved in the oil market. You don't have a lot of money to invest, and you need more diversification than just buying shares in one company. You also want something that will give you exposure to the price of oil without exposing you to all the risks associated with drilling for oil or trading futures contracts on crude oil prices. If you are in these shoes, then you should listen closely. You should buy options contracts on the oil index. This is like buying a long-term futures contract. You buy the right to buy oil at a specific date in the future. You purchase the right to buy oil at a specific date in the future at a preset price. To make money as oil prices rise, you buy a contract for the delivery of crude oil at an agreed-upon price. You then go ahead and sell that contract to another individual or company after it arrives for more than what you paid for it in the first place. You neither get the oil nor the product yourself. You simply buy and sell the contract. Here now is the secret sauce you have been waiting for. I'm about to show you John's step-by-step process for trading in oil stocks. It's now time for you to trade. Once you are approved and have put money into your account, trading options is as easy as a walk in the park. First, log into your account. Next, search for the oil index on the Exchange Traded Fund (ETF) by using its ticker, and then click on Option Chain to see several dates going into the future. After this, click on the future expiration date of the contract you want to purchase, and all available prices will be displayed. If you are very certain that the price of oil will go up and have a date on which it will do so, then this is an excellent investment to make. Here is one advantage of this trade. You can make money with little overhead, and there's no limit to how much you could earn. There's a snag to speculating on oil futures though, and you should know it. If the per barrel price of oil doesn't exceed the specified level set by your contract before the date listed in it, you forfeit all your investment. If you have followed the video so far, then you have everything you need to know to make money from the rising price of oil. Would you like to know more about other great products to invest in? Then click on the link in the playlist on the screen. It will give you all the knowledge you need to make sure you get maximum benefits from your investment. Please like, share, and subscribe to help others like you make money from the rise of oil prices. Thank you for watching.